We're going to do a brief video on FIS stock review, and we've got a daily chart here, Fidelity National Information Services. We've got a blue 200-day moving average. You can see it came up here and came up from the bottom and and bumped into the bottom of a 200-day moving average here back in early August of 2022. It's been below the 200-day moving average all the way since August of 2021. So it came up here, tried to break through this, came sideways, and did just a traditional move that a stock would make when it's going to get out of its bear market. This stock, as you can see, bumped into the 200-day moving average twice, sold down hard, rallied a little bit, which was probably short covering, and then somebody took it out and shot it. The reality of it is this stock's down today 25%. It's down $20, currently trading at $59.37, and on 15 million in shares, average daily volume is about 4.75, almost 5 million average daily shares. Today's the 3rd of November, and it's about 1:30. So let's take a look at this real quick and see what's going on. This Fidelity National is taking a horrible hit today, and we want to look at the weekly chart and see if we can find some support down here, see what's going to happen. If we go down here, this is a weekly chart we're looking at here, which is a disaster, and you can't fit it all in the same screen. Your previous support was right here at about 91. Again, it's trading currently at $59.44. Your next major support is right here, and this is $55.11. So this stock is just basically was in really bad shape today, and I'm sure it's got something fundamental going on with it, but I don't really follow the fundamentals in any stocks. Let me just pull this up real quick to an hourly chart. If we took a look at this hourly chart, we can see that it's been below. This is a 200-hour blue moving average right here. We can take a look. We see it's been below that since August 22nd, which is extremely negative. The 200 went flat, which is good, and it rallied above it, which is good. But the problem is, as soon as it got above it, a reasonable amount, it went from about 78 to 85, they just took it out and shot it. And so that meant there was a tremendous amount of pent-up buyers here who'd lost tons of money waiting for a rally, and they just spooked and sold out of it. Some of this was short covering, no doubt, and the short covering prompted buys. You can see it's hard to see the granular look of this, but there's a lot of things going on here. Like, for instance, these spikes here. You can see as soon as it started to get up on its initial rally, they sold the heck out of it. This was a fake move here. They put in a bottom, put in another bottom, and that led a whole new group of buyers to come in here on an hourly chart and buy. But ultimately, the sellers came in right here on the 31st of October around 9:30 and sold the heck out of it, and that just led it to go dead flat, and then this collapse. So the net effect is this stock is still in an enormous bear market. From a technical perspective, it's just a disaster. But the good news is it's tremendously oversold now. So on a more positive note, the stock's due for a rally back up. I think it's probably going to go down to the low 50s before it rallies. Maybe not, but it's right now at $59.29. But the reality of it is, somewhere I think in the 50s, the stock will rally back up to 69 or so, just because it's so now oversold. You'll see it did it here. It rallied from 85 roughly up to 105. So there's about a $20 rally in here, maybe from a low of 59, maybe up to 70-ish, 72-ish, something like that, just to get rid of this oversold condition. A stock just can't go down forever like this, and especially a stock like this, which is known to rally as it gets oversold. So my best guess is right now, for entertainment purposes only, the stock is going to probably go down a little bit to around the mid-50s, and then rally back up probably to 69 or 70, maybe 72, and then we'll go from there. I checked. We do not cover this stock algorithmically, but we do put out algorithmically entry prices for 190 stocks every day before 7 a.m. We have 1, 5, and 20-day hold periods. You can see Apple, NIO, Tesla, and a whole lot of other ones. You can get access to all of them. Absolutely no cost, no credit card required at rbamresearch.com. There's a link in the description below. You just put your email address, follow over to RBAM Research, put your email address in, and get instant access to 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts, all before 7 a.m. Keep in mind, everything you've seen and heard on here is for entertainment purposes only. Can't use our entry prices or commentary for anything other than entertainment. You definitely trade at your own risk, and you should always do your own analysis. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have a stock symbol you want us to do a technical analysis review on, please put a stock little note in the commentary section with a ticker symbol, and if we can do it, we will do it for you.